Hi there, I welcome you to this learning session on IFRS 15. In this video, we will have a discussion on the impact of IFRS 15 on the interim financial statements. Let's go. So we will discuss in this video the disclosure requirements in respect of the IFRS 15 that are going to impact the interim financial statement disclosures. So, so there are three major things that we need to take into account. The first thing is, as per the IAS 34, the interim financial reporting, which requires an entity to disclose changes in the accounting policy. So, as per IAS 34, if there's a change in the accounting policy during the interim period or as compared to the prior period, we need to disclose it, and including the effect on the prior years that included in the condensed financial statements. So, which means that we also need to disclose the impact that are presented the in respect of the prior periods presented in the financial statements. For example, if I'm presenting interim financial report for 31st March 2018, suppose I'm following a calendar year, then in such a case, I need to disclose the financials for 31st March 2017 as well. So, as per the requirement, I need to disclose the impact that may have on the interim financials for 31st March 2017 as being the prior period. Further, it requires an entity to event a change or disclose a change in the accounting policy and a description of the nature and the effect. So basically, they want us to disclose the nature. It's regarding the revenue recognition. This is the area that's going to impact it, and the financial impact would be in the current year, in the current financials, interim financials, and in the prior interim financials. And one more thing is that it should provide information consistent with that disclosed in the first interim financial report. Suppose we disclose something in the first interim, that is in the 31st March, the same pattern of disclosures required to be given in the quarter ending on June 2018. So, which means that the same or the consistent information should be provided, and the figures or information should be used the latest. The only updation that we can make is the information updation. If you want to update any information, yes, but the disclosure requirements and the disclosure presented should be consistent as compared to the prior first interim period that you have disclosed in respect of the changes in the accounting policy. The third point is the entity will need to provide disaggregate revenue disclosures. So for in the interim financials for both the year of adoption and on an ongoing basis. So I will go through and I will present a illustrative example. So this is basically an example of the disaggregated revenue. Like it's coming from the geographical market, Europe, North America, Asia, and based on the product line as well for mobile devices, communications, and satcom products, and the timing of revenue recognition, whether it is going to recognize at a point in time, which means it's basically related to sales of goods, and over the time generally refer to the sale of services. So this is the primary market, and this is based on geography, based on product, and based on the nature of a revenue recognition, and it's over the period 16 17 16 17, and all based on the reportable segments. So suppose telecom EU is my one of the reportable segment, non-EU, then government, non-government. So this is basically an example of how disaggregated revenue should be presented in the financial statement, basically in the first interim financial statement. So geography wise, product wise, and over the time or at a point in time in respect of the revenue recognition for each of these segment, geography, products, and timing of revenue recognition. So this is basically an example how the disaggregated revenue should be presented in accordance with IFRS 15 and the disclosure requirement as per IAS 34. So thanks for watching the video.